The US dollar plummets. What comes next? After months of soaring on market optimism and renewed investor confidence following Donald Trump's re-election, the US dollar has taken a sharp, unexpected turn. What began as a modest decline in February has snowballed into a full-fledged currency crash. The US dollar index, an important gauge of the greenback's strength against a basket of major currencies, has dropped nearly 10% from its January highs, sparking global concern and raising urgent questions about the direction of both the American economy and Trump's economic agenda. From rally to ruin, the dollar's sudden reversal. In the wake of Trump's re-election, the dollar surged. The dollar index climbed to a near three-year peak as investors rallied behind expectations of renewed economic expansion. Market sentiment hinged on Trump's hallmark policies, aggressive trade stances, sweeping tax cuts, and deregulation, which many believed would drive inflation and prompt the Federal Reserve to raise interest rates, increasing the appeal of dollar-denominated assets. That narrative, however, has rapidly unraveled. Markets are now contending with the consequences of Trump's erratic trade policy and intensifying geopolitical frictions. What was once hailed as bold economic nationalism is now widely seen as unpredictable and destabilizing. From slippage to freefall, a crisis of confidence. Early signs of trouble emerged when investors began to question the coherence of the administration's trade strategy. Confidence was further shaken by Trump's abrupt implementation of Liberation Day tariffs. Steep duties initially applied across the board, then hastily rolled back for all nations except China. The rapid reversal and lack of clarity unnerved markets and eroded investor trust. Since then, the dollar has tumbled not just against emerging market currencies, but also major ones. The euro, for instance, has broken through the 114 mark, its highest level since 2022, reversing prior expectations of dollar-euro parity. Why is the dollar falling? Several key forces are driving the dollar's decline. Tariff-induced trade shock. Trump's imposition of a 145% tariff on Chinese goods has effectively halted direct trade between the world's two largest economies. While pitched as a move to protect domestic industry, the tariffs have instead triggered widespread supply chain disruption and rising costs for U.S. businesses. Policy volatility. The administration's lack of consistency, frequent reversals, vague tariff exemptions, and contradictory messaging has created an atmosphere of uncertainty that deters investment and rattles global markets. Institutional instability. Trump's escalating rhetoric against the Federal Reserve has fueled fears of political interference in monetary policy. As inflation risks mount, any attempt by the Fed to raise rates may provoke a direct clash with the White House. Soaring debt and Treasury sell-offs. Treasury yields are rising sharply. 10-year yields jumped from 4% to 4.5% in just 1 week, raising the cost of government borrowing. The latest congressional budget blueprint could add a staggering $580 trillion to the national debt over the next decade, undermining fiscal stability. Inflation and the risk of a policy spiral. Theoretically, a weaker dollar could benefit U.S. exporters by making American goods more competitive abroad. However, those potential gains are undercut by Trump's own tariffs, which drive up the cost of imported inputs that many American manufacturers rely on. Smartphones may be exempt, but components like batteries and displays are not, placing domestic producers at a severe disadvantage. More critically, a falling dollar inflates the cost of imports across the board, stoking inflation. With the Federal Reserve already under political fire, any attempt to hike interest rates to contain inflation could trigger a showdown with the Trump administration. Should the president successfully pressure the Fed into cutting rates against its judgment, the result could be runaway inflation and even greater economic instability. What lies ahead? A tenuous path forward. The dollar's collapse has exposed fundamental weaknesses in Trump's economic approach. Initial investor enthusiasm has given way to anxiety as fiscal risks mount, and policy unpredictability reigns. If the administration doubles down, pursuing high-stakes trade wars while undermining institutional credibility, the U.S. may be heading toward a perfect economic storm. Persistent inflation, weakening global confidence, rising debt burdens, and stagnant investment. The months ahead will be critical. Investors, consumers, and policymakers will be watching closely for signs of either stabilization or deeper turmoil. Conclusion: more than just a market correction. The dollar's decline is more than a financial headline. It reflects deep-rooted concerns about governance, strategy, and the long-term direction of the U.S. economy. As Trump continues to champion an America First economic doctrine, he may be eroding the very foundations of American financial power. What comes next could reshape not only the trajectory of the U.S. economy, but also Trump's legacy and the global economic order for years to come.